Yo, what's going on, guys? So last time that I made a video, I was talking about the potential of the stock market starting to top out, looking a little toppy. So I'm going to go over a few things here and see how we're doing. One of the things that I did discuss here was Bitcoin, which obviously this is not seeming to want to load for me because anytime I'm at my house, outside of my house, whatever. Okay, so here we go. The only thing I wanted to talk about, if you didn't catch my last video, then you might not know about what I was talking about. This was, just a post that I had made, just a simple chart showing how this 31,100 area, it's a zone, not an exact price, is an area to start getting concerned because we could look for a pullback here. I said time to get caution, in my opinion, getting close to topping out. The pullback could be pretty violent, won't happen in 1 week, which actually it's not really that bad, but great rally over 100% from the bottom, 50% pullback, should be decent reload point. Shorts are looking good around the 31K to 31.2 area. Maybe we can get a wick higher, but the DXY was looking like it's rallying off the bottom. Why get bullish at the resistance? Potential shitty environment, blah, blah, blah. So anyway, just wanted to say that just because this was my idea. I warned you guys about it in the last video that it could be a potential scenario, and so far it's been dropping pretty good. So the first thing that we are going to look at here was, maybe what gave me that signal. If you aren't into trading or you're new, maybe you don't understand, maybe you don't really understand how to find potential pullbacks, this is a good idea. So the first thing you do is look at previous price action. You can look at candle bodies and wicks. You can draw trends, you can draw channels, you can draw zones, whatever. And off the bodies, you have 32.8 based off of this area up here, which could still become an area that we end up getting to with a low wick of 28.7. This area here, really, we had multiple tests of 3,100 based off of some of these wicks here. What was the low candle body? 32.9. Couple wicks here at like 31K right here, 1 and 2. But pretty much it seemed like every time that BTC came down, it really liked to bounce off of this 28.7. This is like a pretty clear area, which as of right now, we are below it. So this was an area that we did get a lot of resistance on. It made sense based off of the wicks that we just looked at on the left. We kind of made like this potential of, you could call it somewhat of an ascending triangle if you wanted to, because of this flat resistance here at 28.5. If you wanted to take the targeted move from these wicks here. But when it starts wicking above price like that, if you have a flat support, I don't like to call it an ascending triangle, but technically speaking, we pretty much reached the targeted point of that, if that's what traders were looking at. I like to take the upper wicks if we did break through upper wicks, and I like to draw a trend off of the 2 highest wicks or whatever amount of wicks that there are, just to basically give me an idea. Sorry, it looked like it was getting dark. I thought the lighting went down. Just to get an idea of where are the highest wicks going to. It seems like that's key resistance. We keep rejecting off of their sellers sitting there, so on and so forth, and potentially draw a pattern off of it. So if you look at what I have drawn in here, ignoring this wick up here, I have something larger for that, which now I drew off of 1, 2, 3 tops here, drew a trend support up there, and it actually lines up perfectly with this upper wick. So that's something to potentially keep in mind. So what did we do? We made a nice double bottom here. We blasted through that key resistance. The first key resistance got rejected on the second key resistance, and we couldn't close any candle bodies above this 30,500 area. See, you can see multiple wicks pretty much coming up to 30,500. We just could never close any candle daily bodies above. So until that happens, you have to expect a rejection, and that's what we got. This potential rising support here was broken. So if this is a rising wedge and this just kind of broke out from the rising wedge, failed to hold it as support, drop back in, the target of a rising wedge is the bottom of the wedge, which is around 26,650 or so. So that could be an area to look for. Now, if you look down at an hourly time frame here, you can kind of look and see that we've put in a double bottom on the hourly. So in order to confirm a double bottom, you draw horizontal trend line above the neckline where candle bodies closed, or you can go off of wicks. I like to go off the candle bodies. They seem to be tested more often than the wicks. Looking at a 30-minute, you can see we started to get the initial blast off here. If you wanted to potentially look at this as a bearish pattern, you could draw off of these wicks here. But as you see, as of right now, basically we've popped above it. But you can go down to the smaller time frame and see if we were able to close above it. So far, we were not. So potentially, we could be just forming, a larger bearish consolidation pattern here. But it doesn't have to be a bearish pattern if you just look at the confirmations and the retests, so on and so forth. Because you could also draw it in like this, and this was a blast out. So now you want to see a pullback, and you want to see potential support found on previous candle body closes that we couldn't hold above. It could range anywhere from 27.4 down to 27.3-ish. And then obviously down here we had 27.300 to 27.3 to 27.400. So if we can find support there, then maybe we could confirm, which right now, as of now in a 5-minute, it's like trying to double bounce off of this 27.388, but that is what it is. So we want to see this potentially start to form a potential W pattern. If we can do that, then maybe we can put it in a higher low here. This will be the first low, and then this is the second low over here on the right. That's just an idea, thought. We'll have to see how it plays out. But now that we've broken through some critical support, which was the 28.7, this could potentially, it's at 28.7 to about 29 or so. But I like the 28.7, 28.6 area because that was the area that we failed to get above quite a bit over in this range here. We continued to test it, could never really close above. So maybe now that we've broken through it, it might not be very hard to break through this time. We'll have to see how it plays out. But you can see the momentum that we had once we broke through, finally, boom, blast off, right? But unfortunately, when we came back down, we were not able to hold it. So 28.7 to 28.6 could be an area, and 28.4 could also be an area. So somewhere between 28.4 to 28.6. If we do have a nice potential of a retest, or maybe we come back up here. I don't know how it's going to play out. Maybe we come up, we fail, then we drop down, and then we make a double bottom on an hourly that is bigger than just a tiny little one. So anyway, that's just something I'm looking at. I will be looking at that 28.7, and we're gonna have to see how we react. If we cannot clear that and retest and get back up into this range, if we have a fake breakout and we fall back in, then we might end up looking for something larger to occur, or this could be setting up for a larger potential rejection. Things don't usually go straight down. This was a pretty good short right here. Boom, boom, take profits. Now let it ride back up. Maybe if you reject here, you could re-enter in a short. And then just while we're on crypto, I was talking about this as well on my page. Solana. This was one I put a short idea out on, which was right here. And I was just talking about, this is very critical resistance. It's very clear that it's resistance. So despite the fact that the EMAs and everything are looking very tight and consolidated, as you see, the EMAs are all pointing up. It looks like we broke through that consolidation and everything. It looked like it was ready to blast off, but that doesn't mean anything to me versus an actual resistance. So what was the key resistance was roughly about this 25.55 to a high of 27.10, and we pretty much wicked above the 25.55, and we sold back in. We couldn't close any candle bodies above. Previously we did get above there, but we just couldn't flip any of this 26, 27 area into support. So until that happens, we have to expect that this is just a sideways range. Usually Solana comes down to roughly about $20 or so. There was a resistance area right here. If you look in, right at this point of 21.25 that previously we broke up, couldn't hold it as support, got under, resistance, and if you look to the left, we pretty much never closed below. We would break below, always come back up. So that'll be an area that we're testing right now that we want to pay close attention to. As you can see, if you zoom in, we are still not able to close below, so that could signal a bounce. Maybe this time Solana decides to go up there, and as it's testing the 200 EMA, which the 200 EMA was technically resistance here. So you can see resistance, it held the trend down throughout this whole consolidation here. And now as Solana comes back, it's now potentially back testing it. If it continued to hold this as support, this could actually be the buy signal here, to be honest with you. And maybe on the next rally up, it finally decides that it wants to break it. That's something that we obviously have to wait and see. But on the daily, that looks pretty nice. If you look at a weekly, we have the 21 EMA curling up, but we still have the 50 EMA up here around 28.70. So that'll be something to pay attention to. If we can wick through and break through the 27, we still are going to have potentially resistance here, but we'll see how much power we can actually get through. So anyway, that's just something I wanted to talk about as it's bouncing off support now. This might not be too bad of a long area to potentially look at. Maybe we need to come back down here after we test the 1 hour 50 EMA, see if we get rejection up in this range, and then we come back down. And as long as we can continue to hold this, this might end up looking pretty good. If we do break it, then we have support further down, which is roughly around this 1989. But as far as shorting, I shorted it up in this range when I was talking about it. I got it up in this, was it this spike? I don't remember exactly where I was shorting it. It was somewhere up in this range, maybe off this bounce. And I've already taken my profits now. So I was considering taking profits lower, but once we started seeing all this wick action here happening on the hourly, I just decided I'd take my profits at like 21.15 or so. So made like $300 or $400 on that. So that was a pretty good area. So now another thing that you can also look at here to potentially give you a better signal if this thing was going to potentially, break out, you could draw a trend line like that. And this is just the speculation thing, but if this thing does rally up, gets rejected here, comes back down, maybe on the next one it ends up doing something like that maybe will give you a better signal that a downtrend is potentially broken. We'll have to see. That's just something I like to do. You could also even go tighter than that and bring it all the way in like this, but that could give you an earlier entry, which potentially right now, I want to go off of most of the wicks like this, based off of like all these wicks, fake out, you know what I mean? Rejection, drop, comes back up. Now it's curling up, potentially coming up to test that resistance. That resistance between the 50 EMA on the hourly is 21.80, and the resistance is about 21.71. So if you end up falling through, then you have to just be cautious because maybe it'll eventually break this. Then we'll just have to watch and see if candle bodies close below the 21.25, continue to hold the below here, or 21.20 as resistance. And if this flips to resistance, then you can have a bigger signal that this is going to continue down. Anyway, that's a long video on Solana. Sorry about that. nvda, this one definitely, it caught me. I was in a short position looking for a break of 64s, and we just never got it. It just held down there all damn day. And I was talking about if we were to pop up above 270, we could see a pretty good rally. And that's exactly what ended up happening. As soon as we broke through, I believe it was on I don't know if it was on a Friday or a Thursday, but either way, sorry, I had to sip my coffee. Either way, we basically, it was right here. We were talking about shorting this thing in this zone here, and we ended up actually spiking up, continuing to get rejection. So if you look at like a 15-minute and we zoom in on that zone, you can see how price was definitely respecting this 268.60 area, and it was just showing so much resistance that to me, I thought that this was going to flip into potentially a resistance point. Maybe this makes some kind of bear flag. Well, obviously that idea, you know, it's okay to have ideas like that based off of support and resistance. It's just you have to know when to get out. And originally I had talked about potentially getting out at the 271, but once I saw this bullish push come in and this volume come in, I ended up closing my my option that I had open right around this break here, because this was pretty much like, even if you drew trend support or trend resistance like this pretty much was it. And when you zoom in here, you can see, we're poking up. The next one, open green, started pushing. As soon as it pushed above this 270, I was like, all right, I'm out. So I closed it, and I ended up taking, I think, about $140 hit. So it's not too good. And then we rallied all the way up. Now, I didn't jump in on it. I was just waiting and waiting and waiting. And finally, we started showing the similar thing. We're showing all this rejection up in this 280. So when we popped above this 280 here, it wasn't here that we popped up, but it was over here that we popped up. This was when I grabbed a position right here. I wanted to get it a little bit above, just so that like I kind of got a cheaper option. It gave me a little bit more risk I could take because it was a little bit cheaper. So I knew if it did pop up here and started finding support, I wouldn't be down too much. And that's what I did. So I ended up holding this thing, and we ended up coming all the way down. But I did close mine earlier than it came down. I wasn't expecting it to come way down here. Now that I've drawn in this potential of the support idea, I don't know how much it'll work. It's hard to say for sure. The pattern could be wrong. It could be more like up here, but either way, I'm going to leave it like that. I closed mine around like 270s or so, because I was thinking like last time we had a lot of resistance at the 268.61. Although we could come down and back test it, I was thinking maybe 270 would be the area. Well, it seems to me like we did actually come down a little bit below the 268.60 that was resistance before, but we didn't close any candle bodies below. But needless to say, I closed mine like end of day around like 270. Then the next day we opened up and we went a little bit lower, and then we pretty much popped back up. So it wasn't too bad of a close either way. We just didn't do much anyway that whole day yesterday. We just pretty much consolidated. So it could be now getting into a potential of a bullish pattern once again, where the 270-140 is where this previous resistance was right here. This is where things get a little tricky, right? Because you have this was support. Is it now flipping to resistance? And that could be a possibility, but the same thing was here. We were getting into potential consolidation. This was previous support. Now is it resistance? Nope. So now is it going to be the similar thing where this was previous support, now it's previous resistance? Nope. So that's the thing with nvda, is it's tough once it gets into the consolidation patterns to decipher. So sometimes it's better to wait for the potential break, right, than to actually get in while you're in this consolidation and bet on a direction. So that's something that I guess I learned here from being in this position here. I was buying this top resistance, and every time it came down, instead of me just closing it down here, I was holding it through, going back to break even, up 200, going back to break even, up 200, going back to break even, down 150. So I guess that was something to potentially learn here, is either number one, find your range first, short your top of your range, sell the bottom of the range, short the top of the range, sell the bottom of the range. And then here, maybe you would have got screwed, but at this point you already made $400, then you lose $100 on the breakout. It's not that bad. Or you just don't, or you just wait, but whatever. Needless to say, now we're in the similar thing where, you know, even if you shorted the top of the range here, sold the bottom of the range, this was the only real good move right here, this one wick. After that, higher low, higher low, higher low. So this could be just setting up for another blast off. So it'll be something to watch, will be this 270-140. If this can flip to support, then maybe you can get another run back up. Now, if this thing runs all the way up, now that we've tested this 280 so many times here, and we even potentially like put in, you know, if you were to look at a 4-hour chart, this thing might have actually put in, like, it looks like a double top. So if this thing does manage to blast back up, this might be the time that nvda might break that 280 finally. So I'm definitely going to be a little more cautious on my shorting, because of this being a potential of a large M pattern, and then you just blast through. You could take one stab at it and just be careful, because then you could have a triple top that breaks you down. And I am looking at this excuse me, I am looking at this as a potential of a rising, a rising wedge. If we deleted the flat support and we tried to like maybe draw this out a little bit better, you could look at it like this maybe, where you have your support like that, and then maybe we can clean this up a little bit better here. Delete some of these real quick, just to kind of like get an idea of like what is this pattern. I mean, it's tricky because you can see that there's so many damn wicks, so you kind of have to figure it out. But maybe this is a rising wedge like this, and we still have a lot more time to potentially bounce in between here before it potentially finally breaks to the downside. And you could even have a scenario where you break through, kind of like Bitcoin, what we were talking about earlier. You could have a potential scenario where it breaks through, tries to consolidate, and then it rolls. And then you finally get that big flush, which could bring you all the way to 290. But as of right now, before we get into that potential idea, we just want to continue to watch the 280. Even if you have a pattern drawn of a rising wedge or whatever you have drawn, if you start closing candle bodies and using support above a specific resistance level, you have to just kind of like keep that in mind, that like, even if you think it's a bearish pattern, as long as you're holding a previous resistance as support, you can basically say, fuck the pattern, right? And just play off of that level. Once you lose that level, start flipping it back to resistance again, then you can add your short. So just keep that in mind if you're drawing patterns. Don't just like put all your weight on one pattern. That's just something to remember, because there was a time that I was putting a lot of weight on a pattern as well, which was right here. And this was a pattern that I was looking at right here on NVDA that we had, a lot of, what is it, right? I don't remember exactly how I had it drawn. Something like this, right? I was drawing it like this, and then I was going off of these two wicks here, something like that. I don't know if it was that, but it was something. But anyway, I think I talked about it in one of the videos when we were breaking through the 242 area of support. And I was like, well, even though we have this critical resistance of like roughly around here, 238, 240, even though we have this critical resistance, we could come up here and get rejected on this 250 to 248 area and reject off this rising wedge resistance. I think maybe I had it drawn a little bit lower like this, because there's your 248, 248, 249. So if we were just playing strictly off of the 248, or strictly off of the rising wedge, and you shorted this, look what happened after. Blew the hell up. So the key thing was to get above here and hold it as support, and then you get your blast off and ignore the pattern sometimes. So that was just an example of what I was talking about if you're not already familiar with that. If you were to draw this all the way out here, this could also be something to, not that I care that much about trend support, but it might not be, now that we're drawing it in there, it might not be too bad of a thought. We had this previous support like this, something like that. What is NVDA doing right now, just based off of what we previously had? Blast through. It's trying to hold it as support, just like Bitcoin was doing with its rising wedge. Does it actually get really tight in here and break through, or does it get really tight and break down? So if this blasts up to 280 again and it ends up failing through, it's possible you could get that breakdown, but you just have to keep an eye on your pattern zone. Another thing that you can do is just ignore all of this price action. You could either take the top of the range or ignore the price action and just wait for like a 262 break or something like that. And then that could give you a pretty good amount of room, because a break at 262 or so and you hold below and use this as resistance, you could actually drop all the way down to about that 240 to 242 area here. So I like 242.30, I think I had in here. That was my key resistance, 242.30 or so. So anyway, is this getting ready to potentially drop and make a big move down? That's what I'm waiting for. So I'm still probably going to try to maybe get in on that 280, but I'm just going to keep it in mind that we could break out in the next run up. So we have to be cautious. So that's NVIDIA for you. If it starts getting above here, then this motherfucker wants to go up higher. That's fine. Maybe I'll try the 290 instead. I don't know. But that's pretty much where we're at. This trend has been going and going and going. And any consolidation that you try to short has not played out. We had sideways consolidation here. Short that, bang, gone. I didn't short this one. I actually went long on this one, and then I closed it in the 248 area because I was looking for that area. So it was just like from 242 to 248. If I would have held it, I would have been freaking killing it, but I didn't because I was going off of that being a rising wedge. All right, so Tesla, we ended up having a move down. We were talking about the potential of this trend not looking too damn good. Right at this point, we were holding the symmetrical triangle. We were talking about this being a symmetrical triangle at the potential of, maybe like this being some kind of symmetrical triangle. I don't remember how I have it drawn in, but I think I was just talking about it like this. Like maybe we have a symmetrical triangle in here, and we're just holding this support, and we're clinging to the bottom end range. If we came out with good earnings or something, maybe this thing would blast up. But I was looking for the fact that we were actually looking more bearish with the bearish move into consolidation at the lower support, looking for a drop down. I didn't take a short on this because we were going into earnings, so I was a little bit more concerned that maybe I didn't want to just take the chance. Like I could have shorted it here at 180s and made bank, but it's like that high risk probability of something coming out good and then just all these EMAs flip to the upside and it's good. But looking at like the daily and stuff, we were discussing the possibility of the resistance we were now getting under the previous support. Everything was curling, and now this continues to curl. So although you're getting below some previous support here, we'll have to watch and see how Tesla goes. I mean, this is a tough one right now. Where we're at is very tricky, because if you were to look at this and say this was a symmetrical triangle of some sort, right, if we wanted to call this whole thing was a symmetrical triangle, we were looking for an upside move on it, then maybe we got to look for the downside move. And if you take the actual, we were looking for up here, if we got a breakout, we were going to test this upper range, 245 to 253 or so. So if you were to look at it as a downside targeted move, then technically your target's 132 based off of that pattern, but that shit doesn't go straight down. This actually could still potentially come back up and retest this as resistance and then fall, but I don't think it's going to get that much I don't think it's going to get too much. As of now, it doesn't look like it's going to get too much. One level that we're going to look at continuously is going to be this 176.40. Because if we do get a pop up to 176.40 and that flips to resistance, that could be a pretty good signal, because that was an area that held us up quite a few times, just off of candle wicks, but still, you had a wick that came down here, instantly bought back up. A wick that came down here, instantly bought back up to 191, but then that strong rejection and a breakthrough. So you have that area, and then you also have this, like, this was the key support as well, which is 186.25. That came in huge. So although we already tested that, I don't think we'll make it all the way back up there, but I could be wrong. I was talking about the 186.25 being a critical support resistance zone. I believe I talked about it on my last video, that 186.25 will be huge. If we can flip that to support, we can be bullish, but until then, we are bearish, right? Do you guys remember that? If you remember that, leave that down below, because you paid attention, and if you took that, woo, you are banking or already made bank. I just wasn't ballsy enough to take it through the earnings. So that 186.25-ish area. And then that maybe 180 or 176.40. I think that 176.30 to 40 is going to still be potentially pretty big. That was an area I always liked. So I'm going to continue to keep that on the chart. So I'm kind of waiting for Tesla to potentially make that bounce move. And if we can get that bounce and we do get a rejection at this critical area, to 270, 177 to 176.40, maybe even as high as 178. I don't know what it's going to do. But I'm going to watch the 176.40. That's a key area for me. If you can get back above it, hold it as support again, then this whole thing could just turn into some kind of large double bottom that maybe the market's going to get absolutely crazy. But for now, we are at a bottom end of the range, so I'm not going to come in here and say we're going to continue to short this thing down to 132. But maybe that'll be wrong, and maybe these are the great shorts right here. If you were to look at like a smaller time frame, we are getting a little bit of like a potential rejection. So if you want to just put a trend support at the top, 66, if you can get a support above 66, that'll be a good start for a potential long position. You could even go off the candle bodies, which is roughly about the 65.50. Once you start seeing candle bodies closing above the 165.50, holding it as support, then maybe you make a larger, a double bottom like that, and then it continues its lift off. But until then, you just want to expect the potential of us dropping back down towards this 160 area. And then if you do that and you continue to hold, then maybe you put in a double bottom that ends up eventually bringing you back to the upside. If this thing just ranges in here, that could either signal a bottom potential or short potential. That'll be tough until you break a level. That'll be something you'll have to really pay attention to. But for now, it's at the top of a potential range that just is starting out. Looking at the 15-minute here, you can even just go up as high as, you can go off the wicks if you want, or you can go off the bodies, 65.70 or so. But yeah, this was a critical, it looks like this was some key resistance too. Like right here, a key support, 67.40. So that might be something to watch as well. If this thing is just going to continue to maybe it gets a nice blast up here and then it gets rejected off of here and then it comes back down. And then you'll have to see how it reacts. But yeah, I'm not sure what's going to happen. It's hard to say right now because we had such a significant drop. I would expect that we'd get some kind of bounce that could potentially add some further short opportunities up in there. Oh, this video is getting a little bit long, so maybe I'll just cut it here. Hopefully you guys, oh wait, no, I wanted to talk about something. These are a couple ones I wanted to talk about. ABBV, this could be like a pretty significant thing going on here. If we look at a daily chart, you can see the clear uptrend, huge rally bounce, high wick 175. Comes down, rallies off the support line again, lower high, double top, 168.30. Comes down, rallies off this support again, potentially another lower high. It doesn't look too bad right now. It looks like potentially you could put in a double top though, up here towards the 63.50 or so. But I'm not 100% sure how it's going to play out. There is a zone of resistance going from 66s down to about, we'll just go down to the low wick, 159.90. So you're back in a very critical resistance zone here. So getting up in here, if we can actually get up as high as 66.30 or even a high wick of 68, so you got to watch these wicks. You might want to start looking for some shorts up in here because if we can, potentially if we fail here, maybe it'll go back down lower, which is right now roughly around the 64-ish area. I'd watch that first just based off of this potential pattern. But if we go off the high wick here like this, high wick to high wick, let's see, high wick to high wick, that gives us a potential high. Oh, let me go up a little higher. Shit. Hold on, sorry about that. Boom. All right, high wick to high wick. That gives us a potential target of 165.40-ish with a high potential breakout, fake out to 66.20s. So I'd be watching that because although we don't have to just come right in and start grabbing shorts, you want to see some kind of solid rejection, which right now you kind of have a good solid rejection point to play off of. Just keep an eye on the 63. But if this does break through the 63 and starts confirming it as support, you'd have to get out of your short. But for right now, this isn't too bad of an idea because you could be looking at a potential of a double top. And if this ends up losing the lower support, then you could actually get a pretty nice short opportunity, which could bring it all the way down here to about the 150 area, 151. And then you'll have to see how this reacts in this range. If it does finally get the bounce, then maybe it ends up breaking out. Who knows? But for now, I'm looking at something in this range here that we're in from maybe the 63s if there's double tops. And if it continues up higher, then you know your next levels are 66 and 65.20, somewhere in there. So I'd be looking at this trend here because as we're getting very tight in consolidation here on a daily time frame, this is just like continuing to bounce off of this uptrending support, but now you're getting very tight. I don't think that this thing's just gonna completely break to the upside and rip up to 200s and shit, but maybe I'm wrong, or maybe it comes all the way up here and retests the 175. So you just have to have your risk in place. But as you're getting tight in this potential resistance zone, this could be a very nice play. So this will be one thing that I'm going to be keeping an eye on here. Looking at the daily MACD in particular, though, you can see the curl of the MACD, so you have to watch that, because if you do get a buy signal, that could be the signal to rocket the stock a little bit higher. You don't want to just come in here and short just based off of the potential of this being resistance. So just watch, but you can definitely short off a level that you see, which right now you can see obviously 162.60s to a high wicks, to the high wicks of 63.50s, and just watch for candle body closes. If you continue to close and use this as resistance here for the next few days, this could actually signal a very nice short. And then the bottom end of the range is down at 59.50, so then you have to watch 59.50 as well. So then you have a range, from a nice range trade idea, from 62.60 down to 59.50. So that's pretty good move right there. You can even just short that, close it down at 59.50, wait for that to break. If it pops back up, short that again if it gives you another good signal. And then just like nvda, right, just trade the range. Options here, close it there, options there, close it there. And if eventually you start making that money, one of the times it's going to break one way or the other. If you're shorting the top and it breaks up, you got to know you're out. And if you're shorting the top and eventually it does break that downside and you're in it, well, you might be good, or you might end up having to re-enter here if you already closed it down at the bottom. So just something to look at here, because there might be a range building. So yeah, that's that one. And then WFC, this is a one I want to look at for a longer potential term short idea. I'm not 100% on it yet, but it looks pretty damn clear. So it's something I want to look at. You can see here we had clear upper resistance here and a rising channel, and then you have clear upper resistance and a rising support, and then you broke the support, and now we've rallied back up, and we're coming back up, and we're retesting this resistance, or this previous support, as potential resistance, as high as 42.40 up to about, 42, like 33-ish. So this is something to watch here and see if this actually does play out. Now you can see we're getting a 4-hour green candle right there. If you look at the MACD, we're about to actually get a potential sell signal, but that could end up turning into a buy signal if it continues to just remain sideways. But this will be something to watch here, because if you can actually get another rally up here and you end up rejecting again and turning into a double top, you could end up getting a pretty good rejection that could bring you down to the lows. And the long term, this is the actual pattern width right here, is about that width. You bring it down to the breakdown point, that gives you a target of 32.51. This could be an area to 33.30. That could be an area to watch. And then overall, if you look on like a daily or a weekly chart, if this is a bearish move, I mean, even if it's not a bear flag, it is what it is, because you kind of have this rising support as well that broke down. And you can see what happened here if you just actually took this. This is actually more of like a right angle, but either way, this right here, let's just see for the hell of it, if we took the measured move of this and then you put it over here, the target of this was technically down here at about 40. We went all the way down to 36. That's just a thought.